Hey, welcome to Dave's Taco Truck. How can I help you today, sir?
Buddy told me how good your tacos are. Let me get 3 carne asada tacos and 2 El Pastor.
Okay, 3 carne asada, 2 El Pastor. You want anything to drink with that?
Let me get a Mexican Coke. I want that one in the bottle.
Oh, yeah, of course. We've got that for you, sir. All right, your total comes out to $14.
My buddy, George Washington right here. What you guys, cash discount? Because I have cash.
We don't have any kind of a cash discount. We take Visa, MasterCard, Discover, Venmo, PayPal, or Cash App.
But I've been told cash is king, and George Washington agrees with me here.
A couple decades ago, George actually had some pull around these parts, but these days he doesn't quite have the reputation that he used to. So I'm sorry, sir, we're going to need to get payment in full via credit.
Okay, well, I may not want to waive my credit card contingency then in that case.
Credit card contingency. Are you in finance by chance?
I am. How'd you know?
Well, give me a second to get your tacos together. We'll see what we can do. And in the meantime, folks, welcome to Mortgage Monday, where Christian Bachelor of the One Brokerage and I will be breaking down if cash really is king, what changed, how you can structure deals to get yourself the best opportunity possible.
But before we get into that, investing in real estate is a great step towards financial freedom. But the hassle of collecting rent, managing cash, and depositing checks can feel like anything but freedom. That's why you need RentApp. With RentApp, you can enjoy secure direct deposits into your bank account using ACH bank-to-bank transfers. Tenants can schedule rent payments and build credit, while you get payment notifications, secure processing, all with a free and effortless interface. Other peer-to-peer payment apps aren't designed with investors in mind. RentApp is specifically tailored to prevent scams and ensure a smooth transaction every time. Here's how it works. Number 1, your tenant uses the app to pay rent, connecting their bank account to schedule payments. Number 2, you'll receive a notification from RentApp asking where to deposit the funds. That's it. Payments arrive directly into your account within 2 to 3 days, with instant payments coming soon. Experience the simplicity and security of RentApp today, the better way to collect rent. Go to rent.app, that's rent.app/landlord to get started today. And now, back to Mortgage Mondays.
Christian Bachelor, welcome to Mortgage Mondays. How are you today?
I'm doing good, David. Glad to be here.
Yes, today we're going to be talking about a bit of a myth in the world of finance, and that is, are cash offers better than financed offers? Since I got into real estate investing way back in 2009, it was common for people to say, I'm writing an all cash offer. It was a little bougie, right? And in today's world, we're going to talk about on today's show if that actually has the same strengths and advantage that it used to. Because for a lot of investors or real estate purchasers, they think that they can write a very low offer as long as it's all cash. So let's start off by just getting into, in your experience as a mortgage broker and a real estate agent, someone who's seen transactions, have you seen that sellers are sort of deferring to all cash offers, or are they mostly looking towards whoever has the highest purchase price? There's
some manner that clients do like all cash offers as long as they're competitive. I mean, am I seeing people accept offers $50,000 below asking because it's cash? No. Right. I mean, I don't see that. However, I think it would surprise people to know how all cash offers are actually structured. Most times they're not all cash offers. Right. And it's funny, as a lender, I help people facilitate what the sellers think are all cash offers all the time. They're just typically different loan products that allow you to kind of, work through underwriting in a way that doesn't kill the loan. Whereas most loan products, the seller is concerned about the ability to close.
So let's get into this. When somebody says I'm writing an offer all cash, let's actually dig into what that means. For one, it means that they have the funds to close even if their loan falls through. So people can say they're paying with all cash, and like you said, they often then go use a loan anyways. And there's nothing illegal about that. You can claim that you're doing it all cash, and as long as the cash shows up, you're good. Really saying you have the cash to close on a property means if the loan falls through, I could still buy it. However, you're not obligated with an all cash offer to buy a house, just like you're not obligated under any situation to buy a house. There is a contract that's written that allows you ways to back out. And if you don't have any way to back out of the deal, you would just forfeit the deposit. You wouldn't be forced to close on a property that you don't want to buy. So one of the benefits to saying I'm writing a cash offer is to say, I have the cash to buy this if my loan doesn't go through. Just remember, if you're a seller and you're hearing that, that doesn't mean they have to buy the house. It is not a done deal if you get a cash offer. They may pay for an appraisal on their own and realize, oh, it's not worth what the appraised value isn't what I paid for the house. They may get a home inspection and not like what they see. They might find another property that they like more than this one. They may get advice from another person who says not a great house to buy, in which case an all cash offer is just as good as its contingencies, which you'll often get when you're financing. Any thoughts on that?
Yeah, I think that's the biggest thing, Dave, what you just said. It's the seller's view of the contingencies. Just so the viewers here understand, as a buyer, the reason why all cash has developed this kind of connotation of being more acceptable, being more likely to get a better deal, it's not necessarily because it's just cash. I mean, the seller still gets the same amount even if it comes from a loan. It's because of the likelihood of it closing. So if you come through and even if you're getting a loan, if you say, I'm waiving my loan contingency, that's essentially a cash offer. You're saying, I am not bound by my loan closing in order to fund this deal, right? And if it doesn't, I will forfeit my deposit. So the seller, worst case scenario, I get the $10,000, $15,000, $20,000 deposit, whatever it is, if this guy backs out in the event he can't close on the deal. There's some leverage there, right, that the seller has against the buyer, which is a lot of times what they're trying to strip out of the contract. We don't want to give you contingencies. We want to hold your deposit. We want to lock you in as well as we can to make sure you close. And sellers view that the highest likelihood of something closing is when that loan contingency does come through, either waived or very low. And that's basically a cash offer at that point, right? You're saying, I do not need a loan to close.
Very good point. So the first point is that you have the ability to close. The second is you're saying, not only do I not need a loan to close, but I will forego having a contingency that allows me to back out of the deal because I didn't get my financing. A lot of people don't realize this if they don't buy a lot of real estate, but you have 3 main contingencies in a standard contract. You can back out because you did an inspection and didn't like something with the house. You can back out because the house doesn't appraise, or you could back out because the lender was unable to secure financing. When you buy cash, you're usually waiving your appraisal contingency and your loan contingency because you're saying, I don't need a loan. So there is some benefit to the seller there. They're not going to be as at much risk of you backing out, but it's not a huge benefit, especially if it looks like the house is going to appraise and a person can get financing. What percentage of people would you say are unable to secure the financing that they thought they were going to get after they were pre-approved and they tried to buy a house?
I mean, with us, it's very low, but we're a little bit annoying on the front end. David, you make that analogy a lot of times of, hard in, easy out, right? Like when you have to do a lot of the hard work up front on day one, in our world, that looks like a full underwrite, before you write an offer. We verify your income, your liabilities, your credit score, your assets for your down payment, your experience as an investor, right? And we custom tailor your application to the corresponding loan product that's the best fit. So with us, I'd say our fallout rate's very low. Now, obviously, if you get a below value appraisal or the house does have something wrong with it that you see in the inspection that you don't like, of course, no mortgage broker can overcome those things. But being able to do a full underwrite up front, right? A pre-approval instead of a pre-qualification, ours is low, but in the industry, David, to answer your question more in general, the odds of you falling out are not zero. I know people who got fired mid-escrow, or somebody who went and bought a car and messed up their debt to income, right? Like mortgage brokers know these horror stories of things that happen in that 30 day time frame of escrow that kill deals. But the harder your lender works up front to verify all of your borrowing credentials, the more likely you are to be able to write a shorter loan contingency, to be able to even potentially waive your loan contingency if it's a really competitive deal, and get closer and closer to being able to look like this all cash offer, right? And being able to potentially negotiate a better price point because of that.
So would you put it around like 5% or less of the deals?
Absolutely less than that. Yeah.
So if you're a seller and they're being told I don't need a loan contingency, it's probably less than a 5% chance that was going to happen anyway. That's the point. It's not like it's a huge benefit to be a person who's like, okay, I don't have these contingencies. Another reason would be you don't have to order an appraisal. So that can give you a shorter timeline, and it's one less thing that can jack up the deal. But the timeline is probably even more important. A cash buyer has the ability to close quicker because they don't have to wait for a lender to underwrite the deal and approve the financing so they can buy. In general, what would you say the timeline is that most lenders need for a loan officer to approve somebody and get a clear to close to fund?
In reality, you have a really good understanding of if the loan will fund or not. Honestly, this will probably shock some people, but within the first week. I mean, we'll have 95% confidence within the first 7 days of escrow. Now, to get your official clear to close, maybe that 10 to 14 days. That's when you like to set that standard loan contingency for. But I mean, once we get that first review of underwriting back, we see the initial concerns with the loan, right? We know if there's something that will kill it or not.
So now the cash close, the benefit was I can close quickly. But how long does it usually take to get a title search done and do inspections?
When you guys actually go and do the due diligence of these cash offers, they usually close in 2 to 3 weeks as well. Very rarely do you see a cash offer with a 3-day closing. It happens. I don't want to say it doesn't happen because it does. And if you're a viewer that has done this, good for you. You're in the vast minority.
So that's the idea. If you're saying, hey, I can close quickly in cash, what you're really saying is I can close in a shorter amount of time. The cash part isn't what matters. The shorter timeline is the real benefit. But if loans can close in 10 to 14 days and it's going to take 7 to 10 days to get back title insurance on this property so that you're not inheriting liens that you weren't aware of, again, it's not really a really big benefit. Can you think of any other benefits to cash closing that historically people have said, well, this is why you should take my cash offer?
Yeah, usually not having to worry about like an undervalue appraisal. Right. I mean, an appraiser is a big deal for a lender because you can get a certain, you guys know like the acronyms loan to value. Loan to value means you get a certain percentage of loan versus what the value of the property is. Well, that value is typically set by an appraisal. If you're putting a large down payment down or a lot of hard money loans, even do instead of full appraisals, they do something called a BPO, which is a broker price opinion, which is basically just a real estate broker going out and giving their estimate of the house, right? There's a lot of loan products that have more leniency in what they value the property at. And if a borrower shows that they have all cash, do they care if the property underappraises? No, because they're agreeing to buy it for what the contract is, right? So that's a big one that I know sellers that I've personally represented are concerned that maybe they're selling the property for a little bit more than it's worth and they don't want to worry about that appraisal, or even issues with the appraisal, roof leaking, foundation cracked. You don't have to worry about those things when somebody's coming in with cash or a hard money loan, right? Because the lender doesn't have as strict requirements on the property than a lot of conventional loans, FHA, VA, those loans are specifically picky about the property.
Okay, let's review the 4 benefits to a cash offer. You're showing that you can close on the deal even if you can't get the loan, which really only benefits the seller if you're going to close, right? A buyer that can close doesn't mean that they will close. They still have to have the same motivation. And if there's a title report that comes back, the cloud's on title, if there's an inspection report that comes back problematic, a cash buyer doesn't necessarily say, well, it's too late. I'm already in. I have to buy the property. There are less contingencies, which gives the cash buyer less opportunity to back out of the deal. But what if you say, here's an all cash offer and I want 14 days to do inspections and I want an appraisal contingency? It's really not any different than a standard offer absent the loan contingency, which if they're pre-approved by a good lender, 95 to 98% of the time kind of takes care of that problem. So again, not a huge advantage. There's no appraisal that's ordered. So this eliminates low appraisals and it also eliminates the time that might be taken to get an appraisal. Very, very small advantage to a seller, but again, not that big of a thing. And then you can have a shorter closing timeline with a cash offer. But if you're writing a cash offer and asking for a 30-day close, there is no benefit to a seller just because it's in cash. Anything you think I missed there?
Yeah. And just remember, guys, cash offer encompasses hard money loans. So as David's saying, cash offer, just remember most cash offers, and I can say this because I've both done it as the buyer representing David, representing our clients, many contracts out there that are written up as cash offers are not closed as cash offers. There's one thing that I just drill through to understanding. It's so many of these cash offers end up closing on financing.
Yeah, that's the next part we're going to get into here. So is it possible to write an all cash offer and still get a loan? And how do you see this being done?
Obviously, yes, it is. How I see it being done is typically it's a loan product with very low underwriting. Those are hard money loans. Those are bridge loans. There's loan products that don't have the same requirements as the Fannie Freddie offsets. You don't have to worry about debt to incomes. You don't have to worry about super high criteria of the condition of the property. They're a lot more forgiving, right? These are direct lenders. These are capital sources that don't have to be dependent on the requirements to sell their loans on the third market in Fannie Mae, Freddie Mac's environments. They're just investors with money that believe in financing real estate. Obviously, for somebody who's specifically buying a flip, which more times than not is the people who are buying with cash or buying with cash to improve a property, these are the loan products they're getting anyways. right? They're products that allow you to finance the renovation. They're products that don't care about the current condition of the property. And you can write your contract as a hard money deal. You can write it as a cash offer, right? Which there's no underwriting in the loan. Doesn't really matter, right? And you show proof of funds, and that's basically all you need. Dave, we were just talking about average closing time. We do have hard money loans that can close in 5 days. We actually are closing on one today for a client. Today is day 5 of escrow, and we're sending out docs to sign tonight. So those things are capable of closing really, really fast, which is why a lot of sellers think they're cash offers. Because how'd you get a loan in 5 days? That's not possible. Yes, it is. You're not going to do it at Wells Fargo or Chase, but it is possible with the right funding sources.
So someone can write an all cash offer, 10-day close. That sounds like they must have the cash. Then they show, hey, I have the money in the bank right here. Here's my proof of funds. They go to you at the one brokerage and you say, okay, I can have your money in 5 days. They fund with money from the hard money lender. They didn't use their cash, but they used somebody's cash.
And at the end of the day, if the seller is signing the docs and he sees a little wire from X Capital, is he going to say, wait a minute, I'm calling the deal off? Of course not. He got his money. He's a happy seller, right? He's not going to kill the deal at the end of the day because there happened to be a hard money lender in between closing. Just like you said, David, you're closing with cash, just not your cash, right?
I will add this. If you say you'll have a cash offer, and you don't have contingencies in there and you're claiming a quick close, and the hard money lender, for whatever reason, falls through, you are on the hook for your deposit if you don't close with your own cash, correct?
That is correct. 100%, which is why a lot of cash offers, they do have the cash, just they're not always closing with their cash. But it is possible, guys. Hard money loans do not have a 100% close rate. It's absolutely the case. Things can always get in the way of your funding.
Now, what happens if the hard money loan doesn't come through? You close with your own cash. Can you then go back to that hard money lender and say, hey, I want to finance this thing?
100%. That's a very common strategy called delayed financing. It's a kind of a trigger word in the industry. That means you did close with cash. So just like we're saying how that's not a huge percentage of these deals, for that small percentage of deals that do actually close with a check at closing from your bank account to the seller's bank account, there is no seasoning requirement to now go get a loan on that property because of a clause called delayed financing. Yeah, David, day 1, right after closing, you could absolutely go open up a refinance and reimburse yourself 75, 80% of that purchase price via a loan.
There you go. And that could include some of the construction costs.
It could, if you pursued a renovation product. Absolutely. We could go not only reimburse you for 75, 80% of your purchase price, we could also stack on an extra whatever your renovation cost is, 30, 40, 50K to value add to that property as well. And I can tell you guys, you can choose to believe me or not, as the person facilitating a lot of these deals, every cash offer usually has some instance of this, whether it's delayed financing or using a hard money loan to close. Most people do not dump hundreds of thousands of dollars into real estate and leave it there, right? There is usually some form of leverage that comes, whether it's after closing via delayed financing or at closing with a hard money loan, even though it's kind of concealed behind a cash purchase.
Well, I think that's one of the reasons that real estate is so appealing to people is how easy it is to leverage. And that's what draws people into it, right? If it was not easy to leverage, more people would be paying cash. And then frankly, property prices would be a lot lower because it'd be a lot harder to buy. What keeps property inflated and values going up a lot is a combination of inflation and the ability to borrow money. Because when you have a lot of inflation, borrowing money benefits you. You're paying dollars back with cheaper dollars, right? It hurts lenders when there's a lot of inflation, but it benefits borrowers.
And if you guys ever want to really see how fortunate we are, go check out the financing situations in other countries. This has blown my mind. I've done this recently. It is very difficult. There's not 30-year fixed loans. There's not 5% down loans. In other countries, it's you're putting, if there is financing available, you're putting 50, 60, 70% down a lot of times. And it's usually on like a 5-1 arm. I think of Canada doesn't have 30-year fixed rates. So everybody who bought during COVID, they're getting slammed right now. It's very similar to our commercial real estate in America. So if you're ever frustrated, obviously interest rates and, down payments and all that, just know that we literally have it the best there is in America in terms of the financing options that are available to us to acquire real estate.
So just know when you hear the phrase cash offer, cash is king, or what if we pay all cash, it doesn't have the same weight that it used to. Lending products have evolved. Lending timelines have compressed. And overall, different products are available that never were before to create a lot of flexibility in financing that makes cash less valuable than it was before. And if you want to know more about information like this, we got today's topic directly from the BiggerPockets blog. So go check out the BiggerPockets blog, educate yourself on more things real estate related, or the forums. Both are great resources to improve your experience, your knowledge, and your education in the world of real estate investing. If you've got a minute, check out another of our videos. And if not, we will see you next week on Mortgage Monday.